Hello and welcome to Cramer's Corner with a technical update special edition with Cramer that I'm going to do on a weekly basis. This video is for educational purposes only. There's no recommendation or advice whatsoever. We'll go through a couple of, actually six instruments. In this case, it would be Apple, Meta, S&P 500, gold, euro dollar, and dollar yen. All right, let's move on with the first one, which is Apple. And let's have a look at what happened yesterday, and let's see what could actually play out in the coming days and weeks. We have a key level here at 210. Yes, I know it's 209.68, but I always add or subtract a little bit. That is the gap that we're talking about. Market actually opened yesterday above that, but it closed, the price closed well below. If it closes below 198, it has closed this little gap that it did, and then that could mean that the downtrend will resume. For Apple to have a chance to at least push higher, it needs to close above 210 on a daily basis. Then there could be potential up to around 220, 225. But up here, we have the 100, the 200, and the 55 moving averages coming down, and that will kind of putting a lid on it. Negative sentiment on the R side, that's the relative strength index. It's a strength indicator that indicates or tell us a bit about the trend, but also the strength of a trend and a movement. So here we have the daily chart with the daily candles, open and closing prices, high and lows, and so on. And then I have some moving average. I'm going to hide this indicator here. It's a little bit more complicated. On the weekly chart, we are also in a bearish trend, and as you can see, if it moves back below 198, 196, and close below that level, well, then we could see another push down towards the previous lows here about a week ago, and maybe even lower. For Apple to really change the entire picture and establish a bullish trend that can take it much higher, it really needs to close back above 226. So that will be key here the next couple of weeks. Also, negative sentiment on the other side. We are below 40 threshold, and until we break back above and closes above 60 threshold, we are in a bearish sentiment. That does mean we can't see higher levels, but it just means that we will see there is a sentiment to the downside. Moving on to Meta Platforms, that has ended up in an antitrust case in the US, where that maybe has to be forced to sell off WhatsApp and Instagram that it bought some years ago. It has been looming for quite some time, but now seems to be gaining some momentum. 588 is the key resistance for Meta Platforms, formerly known as Facebook. I close above that, well, then there could be potential up to around 630, 640 resistance. But look at this, we have the 55 moving average coming down, and also the 100. So if they get 100, it will take about a week or so, of course, depending on the market activity, for 55 to reach the 100. If they are both declining, it's called a death cross. So it's not that super reliable because it's two medium-term moving average. It's another matter if it's like a shorter term breaking or a medium to longer term. But 588, that is the key support. If it pushes below the lows from last week, which was around 481.90 down here, as you can see, well, then we could see a sell-off down to the region around 414, maybe even lower, maybe even down to the 200 moving average and this correction phase here. So that will be key to watch the next few days and weeks to see what's going on. Negative sentiment on both RSI, weekly and daily. And what is also important to see is there's no divergence. Divergence means that if the RSI is higher than previous, and where the market is not higher. I'll get back to that because we actually have some examples a little bit later on this. If we look at the overall index, S&P 500, and start to look at the bigger picture here on the weekly chart, negative sentiment, we got below 40. I know we are back above. but that doesn't change the picture. It really needs to get back above 60 threshold to again indicate positive sentiment. Massive sell-off that took it down to below 5,000, actually all the way down to 4,835. If it takes out that, well, then we're looking at levels around 4,600. So let's see how it's playing out on the daily chart. S&P 500 needs to close this gap here up to 5,522. It needs to close it. And you'll see it spike below here and also spike a little bit above and maybe overlapping. But we are talking about the body of the candle. Here's a positive one. Here's a negative one. It needs to close inside the body. And that means it needs to close above 5,522. Then it can actually, if that occurs, that scenario plays out, then there could be potential up to these peaks here just below 5,800. But here we have the top of reversal pattern. It's actually called evening star doji, doji evening star formation. That's the doji star there, and the bullish and the negative candle. However, look at what's happening here. We have the 55 moving average coming down, declining heavily, very fast, and the 200 also declining. And it would probably cross over below the 200 in a couple of days. And if it does that, and they're both declining, which it looks like at the moment, that's a death cross, because then you have a medium term and longer term breaking or crossing below. And that is not a good sign for the underlying trend of the market. If S&P 500, as I said, failed to close this gap, and it starts closing below, or it closes below yesterday's lows at 5,358, downtrend could resume, and RSI could drop back below 40 threshold. That would be a confirmation that the selling pressure is coming back in. Moving on to gold. And as you can see here on gold, it has really pushed a massive uptrend. There was a bit correction there, a little bit here a few weeks ago, and also a little bit there. And on the weekly chart, we can see the uptrend is fairly strong. However, you can see the RSI has been declining. You see the levels here on the RSI, the values here are lower than here. So that's called divergence. That means market price moved higher, but the strength indicator hasn't really followed through. However, as you can also see, you can draw trend lines on the RSI just as well. You can draw trend lines on the actual price graph. So that means that it sometimes gives an indication that it will move higher despite the fact that there's divergence. And that will be key here the next couple of days. And you can see that the RSI actually closed above the falling trend line. They're breaking above it, breaking that trend. Still divergence though. So here we have the short-term market moved higher after correction, reached 3,248, almost a few dollars from it. And it seems a little bit stressed here. You can also see the RSI values declining from here. But here market was higher than here. That is also a sign of divergence. However, if gold takes out the peak here at 3,246, then I think we will see 3,300, possibly higher being reached. But short term, we could see a little bit of a correction. Euro dollar, and I think we should zoom out quite a bit to see what's actually going on. Here we have euro dollar. It had this massive downtrend here in 2021 and 2022, that it is now possibly being challenged, and we got rejected here at 114.80.85. That's the resistance area around these levels here back in January, February 2020. If it takes out that level, well, then we are looking at 117, which was the price, around the price when it broke below the support there. And then there could be, if it takes out that on the medium term, weeks, months from now, then we are looking at 120 and possibly higher. It's very short term, just to see what's going on here. We are zooming out a little bit. We are a little bit stressed on euro dollar. You can see actually the RSI value is also declining a bit there. So we are a little bit stressed. We could see a little bit of a setback, maybe down to 112, but if it takes out 115, then we're looking at 117. And finally, dollar yen, also very important cross or pair for markets and the world economy. Dollar yen, well, 140 and a quarter, 140.25, really key strong support, but I'm not sure this time it will hold. I think it will, and this is not an advice to sell or invest or anything, but I do think we will see a test if there's no strong support until then. And even then, I think if it tests it and takes it out, then we are looking at 137, which is also very strong support. Given that we have the 200 weekly moving average coming up, giving some support in this region here. Negative sentiment on the RSI indicating lower levels on the weekly and on the daily. Well, there's a minor support here at 142, 142.20. I think it will be taken out and we will be looking at 140 and a quarter. That is a little bit stronger support, but also, as we talk about, 137, 138, 137 seems to be where we are headed at the moment. To totally change that, reverse that, well, it needs to get back above 151.25, but does mean there can't be some corrections on the way up. So we maybe have a little bit of correction and then maybe possibly, I think, the next move lower. All right, that's all for today. Hope you enjoyed this little video. Please comment, and you can always find me on Cramer's Corner, TA, on YouTube. I have my own YouTube channel. I do daily video updates on all instruments, more or less across the board, all asset classes, FX, stocks, single stocks, indices, commodities, and interest rates. Have a nice day and talk to you again.